Which connects to our next panel, who we're going to be talking about driving down the cost of low-carbon hydrogen. So maybe champagne can be more affordable to all of us. I don't know. We have another wonderful panel of people for you. Moderator, Dr. Charlotte Kirk, Head of Technology Investments at Fortescue. 1 second, I think I have nowhere to sit. Give me 1 second. Simon Morris, CIO of Hiiroc. Jessica Pedroni Thorell, Investment Director, Co-Lead Climate Tech Kinnevik. And Kaarel Kuusk, Head of Partner Relations and Hydrogen Projects at Eesti Energia. And your job is to tell us how to drive down the price of low-carbon hydrogen, I hope. Okay. Moderator, would like to take your seat, please. Give me 1 second. You may come on stage. We'll find somewhere for you to be seated to explain all your wonderful things. Welcome to the stage. Welcome to the stage. Please, take a seat. And give us some insights into drive down the cost of low-carbon hydrogen, the champagne of the energy world. Champagne and chocolate, a wonderful mixture, I think you would agree, yeah? Welcome, panelists. And our moderator, when you'd like to begin, the stage is yours. Thank you very much.
Good morning, everyone. Thank you so much for being here, and thanks to the teams at Energy Tech Summit and Contrary Ventures for hosting us. My name is Dr. Charlotte Kirk. I lead our technology investments at Fortescue, and I'm very happy to join the stage with three heavyweights, thought leaders in the hydrogen market. We look forward to learning from each of them today. We'll also have some time at the end for Q&A, so please, keep that in mind as we go through the discussion, but also feel free to sort of reach out to us after the event. So perhaps we can start with some introductions. So, as I mentioned, I'm Charlotte. Fortescue is the fourth largest iron ore exporter in the world, based in Perth, Australia. But what comes with that is a huge amount of emissions. And hydrogen can play a huge role in our decarbonization journey, for example, as a transport fuel in fuel cell range extenders to power our mining vehicles, as a chemical reductant in the green iron and green steel process industry. Ammonia is needed in our mining explosives as a blasting diluent. We're developing ammonia-powered trains to take the ore to the coast, ships to take it up to China. We recently developed the world's first ammonia-powered vessel, which is the first ever to be commissioned to have ammonia as a fuel, fully certified, and it's sailing around Singapore. So a lot of applications for hydrogen, and we've got a lot more to talk about today. So perhaps we can start here. If you'd like to introduce yourself and the company, and yeah.
Is that working? Not very well by the sounds of it. Yep. I'll just shout. My name's Simon Morris. I'm the CCO and co-founder of Hiiroc Limited. Hiiroc has produced a unique technology to generate low-cost, zero-emission hydrogen using the bad word of hydrocarbons. Hydrocarbons obviously set a few eyebrows raising as we're trying to move away from the hydrocarbon economy. But we can use hydrocarbons not only in their current form, but also with renewable natural gas to create clean hydrogen and also solid carbon. The carbon has potentially quite a considerable commercial value. So obviously, if we can use that to offset the cost of the hydrogen, that is a very good way for us to drive down the cost of hydrogen. In current calculations, we're working to let you know of our technology stage. We are TRL 7 at the moment. We have 3 pilot units currently running in the UK with one of our investors, Centrica. And our current costing for hydrogen at the moment, without any subsidies or without any revenue from the carbon, we are cheaper than water electrolysis. And we're hoping that once we get the revenue for the carbon and we improve the actual processing, we should be getting down to that magical €1 a kilogram price.
Amazing. Jessica.
Can you hear me? Yeah. I'm Jessica Pedroni, and I am an investment director at Kinnevik, where I also co-lead our investments into climate and specifically lead our efforts into hydrogen. Kinnevik is a permanent capital investor focused on growth stage companies in Europe and North America. One of our most recent investments includes H2 Green Steel, which is building the first new steel plant in Europe for the past 40 or 50 years. And they will utilize hydrogen and become the largest operator of an electrolyzer in Europe at 700 megawatts.
And Kaarel, perhaps you could round out the panel.
Hello everyone, I'm Kaarel Kuusk from Eesti Energia. I'm head of partner relations and hydrogen projects. Eesti Energia in translation means Estonian energy. Nowadays we use more brand called Enefit, as we're active in 5 different markets. Eesti Energia is quite diversified company. We have our renewable energy production subsidiary. It's the largest wind energy producer in the Baltics. Then we also have our mining company, our pyrolysis units. We produce oil out of oil shale. We have thermal power plants, about 1.5 gigawatts, also energy sales units, so quite diversified. And our hydrogen comes into the game. In those thermal power plants, we have been using hydrogen for more than 50 years, actually. And now we are doing the first pilot project on green hydrogen. And in the near future also, we're going to transform our oil industry into chemical industry, and we will use thousands of tons of hydrogen there in 5 years' time.
Amazing, thank you. So we're here to talk about the hydrogen market. Today it's worth about $150 billion, but it's expected to grow 10 times to 11.5 trillion. It's been projected $12 trillion by 2050. Clearly hydrogen is a key enabler of multiple industries. It's an integral part of our future energy system, and it is a key substitute for fossil fuels. And to reach our net zero goals, we need to drastically lower the cost of low carbon hydrogen. But firstly, perhaps we could start with what a definition of low carbon hydrogen is. And maybe, Simon, starting with you, given the technology that Hiiroc's developing and sort of how it differs to electrolytic hydrogen versus other routes to hydrogen, maybe you could sort of give us a little overview on your definition of low carbon hydrogen.
Sure. I mean, I think it's really important that for hydrogen to be taken seriously, I think there's got to be a level playing field for how hydrogen projects are costed, how hydrogen production methods are assessed. I think that this ever-expanding rainbow of grey, blue, turquoise, gold, green, white is not really helping the situation because people get very confused. We get told that we are turquoise hydrogen because we are pyrolysis when we aren't pyrolysis. So we have to come up with another colour. I think it's time that the whole industry was very sensible about this, and you just have a number. You have your carbon intensity for production. Then you're just adjusting that as per if you're using grid-connected electricity. Obviously, you have to take into account the cleanliness of the grid that you're using. But if you have a sort of standard setup for this is your carbon intensity under these parameters, then everyone knows where they stand. They can look at every technology in an equal way on a level playing field and see exactly which of the technologies is best for them in their situation. Because as far as I'm concerned, we aren't in competition with anyone as a hydrogen technology. Everyone's on our side because we're all trying to do the same thing. So if water electrolysis is better for a certain project than our technology, fantastic, do water electrolysis, roll your project out and be successful. But it needs to have that ability to judge how you're going to produce it long term for the duration of the project, the impact that cost has, and the only way you're going to be able to do that is by having a level playing field to judge the carbon intensities of those various production methods.
Yeah, Jessica, what do you have to
maybe
add?
jumping in, I completely echo that, and I think we see on the steel side, for example, that landscape actually evolving quite quickly. We're moving to kilos per ton of emissions, so it's becoming very specific, and I find that the buyers are actually becoming sophisticated very quickly here. So from having maybe had not so much of a framework, suddenly they're becoming very specific in their asks in terms of kilos, et cetera, because ultimately this will feed into their LCAs and everything that they need to do more downstream, right? So I think it is happening in certain pockets, but I agree that we're not fully there. But ultimately, that's the only way to create a level playing field, and honestly also really get compensated for when the levels are really low, right? Because it will have to be a price based on the carbon for that specific type produced.
And I think that the international certification and sort of a globally agreed methodology of how to calculate these life cycle emissions across the value chain is clearly so important, so that we really have a traceable and sort of transparent system. Because something like H2 Green Steel, so unique in that sort of the offtake of the product was really what really enabled the project finance to sort of underpin the project. And it was those buyers who wanted that green steel ultimately for cars and the like. So did you want to add something from the Estonian angle?
Yeah, I agree with the previous panelist that carbon intensity is what matters regarding the environmental aspect, but also when we're trying to do business, then the price comes into the game. And when we have been developing our green hydrogen projects, then three main factors that we see are, well, in our region actually the first is the availability of renewable electricity, because in the Baltic region we are in deficit of renewable electricity. There is no surplus, and that's not the case in Fortescue. That's pretty much everywhere in Europe at the moment. And also then the price of electricity, because that's the major factor when you do electrolysis. Then comes the cost of hydrogen technologies, where Simon can help us hopefully in the future. And yeah, these are the most important aspects. And of course, then what else maybe Simon can do, and the other companies that are developing hydrogen technologies to improve the efficiency of the technologies.
Absolutely. So what I'm hearing is sort of the role that policy and regulation can play in helping drive down the cost. So if we think of the two key markets for sort of low carbon hydrogen today is Europe and North America, and quite different policy subsidy regimes. Obviously in America we've had IRA, which has been widely touted as for all the benefits that it brings, but it's really a sort of a supply side policy, artificially lowering the cost through those tax incentives. In Europe, we have a much more demand-side focused policy, with the Renewable Energy Directive, with mandates and quotas and all of that. Do you see the difference in subsidy policy landscapes as a challenge in terms of bifurcating trade and sort of challenge, or do you see that different but complementary? And sort of how do you see that role of policy in driving down the cost of hydrogen and its derivative technologies?
Yeah, just to touch on a point you made when you were speaking previously. I think that, if you look at in the USA, for example, if you're applying for 45V in the USA, you have to go through something called GREET modelling, which is where you put in your production process, you put in your feedstocks, you put in all of your parameters, and you get a carbon intensity price for your project. However, that's technology specific, and for example, we as a company aren't on the technology profiles for doing that. So then you have a situation where you have organisations are wanting to, like the carbon hubs, for example, in the USA, they're looking to choose their technology for 2, 3, 4 years' time. And they come to us and say, what's your carbon intensity as per GREET? And we can't give them a number. So obviously we're lobbying in the US to try and get things like that changed. But again, there needs to be some sort of coordination at a government level, because if you've got international companies going after international projects, there should be some sort of standardization in that ability to assess the carbon intensity. The modelling we used when we qualified for the low carbon hydrogen standard in the UK, it was very specific help from the government and the NZTC to help us get that done. But again, some sort of global standardization, whether that's driven by governments, whether that's driven by the wider hydrogen industry, but there needs to be some standardization of that. The question you asked, I think the way that things have been structured in the USA, where the funding is in the form of the subsidy, is a much easier way to get projects financed. I think that the sort of more grant-led methodologies from Europe and the UK make that a little bit more difficult when you're trying to bank a project. But generally, I think that it's just about realisation from governments that there needs to be a substantial change. I think, considering how quiet the hydrogen world was 4 years ago, our company started in 2019, and I put a Google News alert for hydrogen on, and it used to ping once a week. It now pings once every 5 minutes. So, and I think now that that sort of is really out there, that hydrogen is going to be a very important part of the energy transition, there needs to be work done at all levels to make sure that's as easy as possible.
Mm-hmm. Jessica, maybe you have a comment on the role of government and subsidies in the...
I would say Europe has been really good on the stick side with the updated ETS and the introduction of CBAM, but I think on the carrot side, it's still too unpredictable. You can apply for chunky things, the timeline is long, it's distributed in an interesting way, I would say, while in the US, I would say, of course, with the production tax credit, assuming you fulfill the criteria, it actually becomes predictable in a very different way from the demand side. Next to that, you're also then helping, for example, the electrolyzer producers in terms of actually building facilities, et cetera, right? So you're helping the ecosystem from numerous angles, and that's also why we see that even if we have some of the leading, for example, alkaline technology in Europe, some of these players are choosing to go to the US to set up the next plants, right? Because the incentives are there, the customers are there, right? So I think if Europe doesn't get its act together, we're at the risk of not being at the forefront from at least an electrolyzer perspective, which I think would really be a pity given that we've already lost solar and batteries, let's see. But I think it would be a shame if we lost the electrolyzer side, given that so much of the technology is Europe-based.
Yeah, I can also say that when we are developing those projects related to hydrogen, that what we see that subsidies are very needed. When we talk about this pilot project, what we currently are having to produce hydrogen and distribute it and to use it in transport sector, then we see that subsidies needed both on CapEx side and also on OpEx side to be competitive with conventional uses. And also we see the same, I mentioned in the introduction, that we're trying to transform our oil industry to where the end product is fuel, to chemical industry, where the end product is chemical industry feedstock. In simple words, the end product will not be burned anymore. And that oil we need to purify, and we need a lot of hydrogen for that. And where the subsidy comes into the game is that the base scenario in this oil refinery, it's always fossil-based hydrogen, what we're going to use because it's cheaper, way more cheaper. And if you want to start using low-carbon hydrogen, then this gap somehow has to be closed. So.
Amazing. So I think, we're clearly very bullish about hydrogen. We're very optimistic, hopefully not only on the stage, but in the room. And we've spoken about some of the challenges in terms of policy and government support, but, we're at the Energy Technology Summit. And so it'd be interested to dive into sort of if we see technology being a challenge or an opportunity, and sort of where the role for startups, some of whom might be out there pitching, what is the role of technology in this transition? Is technology a limiting factor, or is it largely there? Is the challenge more on mobilizing the capital, getting sort of buy-in from stakeholders, governments, end users, all of that? And if there is a need for innovation, where along the value chain do you think it is?
Well, obviously, as I'm an innovator in a startup, I think it's very important indeed. But I do think that having gone through the journey now where we started in 2019 with sort of friends and family putting into the business and self-funding, going through Series A and Series B now. We're now planning Series C for 2025. It's amazing how I'm going to be rude about the UK government here, but as I'm in Spain, I might get away with it. We presented to Innovate UK concerning potential for funding us at a very early stage. And we were asked by somebody who will remain nameless at Innovate UK, what's the precedent? And I said, well, if there was a precedent, it wouldn't be an innovation. And I think that the appetite for innovation has to be there, and the understanding that if you want something where you've got a guaranteed return over a guaranteed period, then probably being a venture capitalist or an innovation funder is not the world for you. And I think that, as a company, the level of government support we got up until the point we were at pilot stage was quite poor. I now think that now we've got proof that our technology works, and we've got pilot units running, and we're planning our first production line now for the technology. Now the government is actually being extremely good, and the NZDC have helped us a lot in the UK. We've got a big project going on with Cemex in the UK to decarbonise their cement and concrete production plant in Rugby in the UK, and we're looking at now Cemex plants also in the US. And now the government is being very supportive, but I think if the chances are that most of the solutions which are going to save us are probably still ideas at the moment. And I think that if we're going to get those ideas out and working, governments, VCs, corporate VCs have to be a little less risk averse than they currently are, I think.
So Jessica, H2 Green Steel is often touted as sort of one of the pioneering startups, if it can still be described that in the energy tech landscape. Obviously just done very impressive capital raises that you've sort of been closely involved in. How have you seen the translation of that deep technical foundational underpinning of the company to sort of a wider group of stakeholders, to investors, to people who might not have that technical nuance, but ultimately need to be involved in the journey?
So I think actually the interesting thing with H2 Green Steel is that it actually isn't a play on technology in many regards, because the technology on the hydrogen side is established. So there's limited or no technology risk. It's mainly an execution piece. And I think that's actually been a really important piece to being able to raise the amounts of capital in being able to execute on this type of project. But I would say as a part of our diligence and our work, we spent a lot of time looking at the different ways of producing hydrogen, right? And you have existing technologies that are fairly late stage, but have not been deployed widely because there hasn't been a demand, right? Then you have this amazing plethora of companies that are earlier stage that have this breakthrough tech that can really, also change the landscape. But in my view, we have quite a lot of technologies at the later stages. For me, it's about getting these technologies out there and having the projects to do so, and ideally large-scale projects, because that's ultimately the only way we can drive down cost and really get those learning rates to really be able to get down the cost of electrolyzers if we're focusing on that route, right? So for me, it's about making sure we get the funding for large-scale projects, getting the permitting, and getting the offtakes, right? Because that is the only way that we can create that cycle where the cost comes down and it becomes affordable, not only for the large-scale projects, but ideally over time, more mid to small-size projects as well. But I think getting comfortable with the hydrogen piece as a part of that project was incredibly important, just because building these huge megawatt installations is the next step of really taking these future steps of making hydrogen the future green molecule.
I think we really have an interesting road ahead in terms of redefining the capital stack. And so venture capital have often been the sort of world of B2B SaaS, and that's easy to put some money into, but now we're moving into a lot of more of these infrastructure plays, and especially with the sort of first-of-a-kind type pilot projects, maybe you do have to use the less innovative, more de-risked technology, the alkaline electrolyzers that have been around for a while, to get the project finance, to get that bankability. And the next wave of innovation will have the technology that's going through seed Series A funding today. Certainly as a corporate, we've set ourselves the target of fully decarbonizing our Scope 1 and 2 emissions by 2030. To finance that, we cannot be using VC-backed early-stage companies because it just won't be at scale and deployed in time. So I think we're seeing certainly a gap in the sort of Series B pilot plant, first-of-a-kind type deployments. That sort of infrastructure capital at venture risk that is an interesting gap in the market, I think should be explored.
One thing just to go a little bit against the innovators as well, to stand up for the VC companies, I think it's really important that innovators and entrepreneurs in their startups, they need to be much more realistic. Yes, there are opportunities for a lot of these companies and technologies, I'm sure, to become the next unicorn business. But companies should be trying to raise a lot more money than they think at a lot lower valuation than they want. And they've got to be really realistic. I think that particularly for a hardware company like us, a hardware company is a big ask for a VC, corporate VC or a straight VC is a big ask if you're a hardware company, and we are going to be capital intensive. So if you can just be, control yourself a bit when you're pitching for money and understand that it is a big ask for a VC and that you need to be really, really sensible about your valuation and you need to completely underestimate how much money you're going to need. And I speak from experience.
So we do have 5 minutes left. I don't know if anyone in the audience has any burning questions arising from the last half an hour's discussions. Otherwise, we can sort of carry on amongst ourselves, I'm sure. Yes, one at the front.
So when do you personally expect hydrogen to become $1 or euro per kilogram value?
We're currently pricing a project in the USA. Now, the USA obviously has been largely insulated from the fluctuating gas price that we've seen in Europe recently. We're currently pricing a job in the USA. With the cost of the feedstock, we have a good amount of renewable energy on site. We have a very clean grid. We're coming around about $2.64 a kilogram. We hopefully will qualify for the low carbon production standard in the US. As we're using natural gas, the maximum we can get for that is 60 cents a kilogram. So that takes us down to around $2. If we manage to commercialise the carbon, we're going to be producing 3 kilograms of carbon for every kilogram of hydrogen we produce. So if we can get 33 cents a kilogram for the carbon, we're going to be hitting that dollar end of 2025.
We have never seen such prices in our financial models. We have been modeling a lot and using ridiculous power prices, even negative prices, and never seen such prices. I don't have a crystal ball. I don't know when.
Yes, at the front.
Maybe a low-level question, but what makes the difference between green and grey hydrogen, and what about the cost of their production?
Well, grey hydrogen is as cheap as you can do it because it's a careless way of producing hydrogen. Obviously, you're producing from hydrocarbons and you're letting potentially 9 kilograms of CO2 for every kilogram of hydrogen you produce into the atmosphere. So grey hydrogen, obviously, even though I'm a big proponent of hydrogen, please anyone don't do grey hydrogen.
And I think the other thing to note is that because it's derived from fossil fuels, not only is it not sustainable, the price is very volatile in connection to natural gas prices, but it's also going to rise as more effective carbon pricing comes in. We've already discussed CBAM and sort of the carbon border adjustment mechanisms, but the minute we start taxing goods based on their carbon content, fossil hydrogen and all of its derivatives sort of fall away, and that's where sort of renewable hydrogen derived from renewable energy has such a benefit because it's decentralized, it sort of democratizes energy. There are renewables everywhere, they might not be very good everywhere, but you ultimately could put an electrolyzer anywhere you wanted to and produce hydrogen. So you're then decoupled from the fossil volatility, and you can sort of have a much more decentralized energy system. And so, yes, there will be nuances, countries where there's legacy fossil infrastructure you need to optimize. Sure, the story is going to be different to perhaps the global south, where you can start with a blank slate. But yeah, definitely don't do anything fossil-based.
Unless it's with us.
May I add one topic that we haven't talked about? This is hydrogen infrastructure, pipelines, which is desperately needed when we are talking about large-scale hydrogen production and consumption. This also can help us to solve the storage question. And currently there are some projects in the Baltic Sea that the gas system operators are early phase planning. The initial ideas have been to transport or export that hydrogen that was produced or going to be produced in the Nordics to Central Europe, which I think actually is not a very good idea. We should use it in where it is produced, because there will be huge chemical industries as well. So Germans can also buy that hydrogen, but firstly we should use it ourselves.
Amazing. So with the last minute to go, I'd like to thank Simon, Jessica, and Kaarel for a really interesting discussion. Thank you all for listening. Please sort of reach out if you have any questions. I think we're all agreed that the hydrogen is an exciting economy to sort of dive into the future for, and sort of will be a key part of the energy transition. So be great to continue the discussion afterwards.
And well done, Charlotte, who stepped in as moderator with about 5 minutes notice. And she's done a grand job.
Cool. So enjoy the rest of the day, everyone.
Thank you.